Hi guys, this is CA Balakrishna. In this video, we will be revising SEBI LODR regulations. Okay, SEBI listing obligations and disclosure requirements. Basically, these regulations are issued by Securities Exchange Board of India. Now, which entities have to follow these regulations? All the listed entities must follow these regulations. Okay, now apart from these LODR regulations, there are also some other regulations known as ICDR regulations. However, these ICDR regulations are not applicable for our syllabus, but it would be better if you know the difference between ICDR and LODR regulations. ICDR regulations means issue of capital and disclosure requirements. Basically, if you see, when a company want to list its shares on the stock exchange, then it has to comply with ICDR regulations. Once it has listed its shares on the stock exchange, after that it has to comply with LODR regulations. That means ICDR regulations would be pre-listing compliances, whereas LODR regulations would be post-listing compliances. That would be the difference between ICDR and LODR regulations. However, ICDR regulations is not applicable for our syllabus. Now, applicability of LODR regulations. To which types of companies these LODR regulations are applicable? All the types of company which have listed following securities on the stock market, for all those entities, these LODR regulations will be applicable. Let us see what are the securities covered. First of all, specified securities listed on the stock exchange. Okay. Next, non-convertible debentures, redeemable preference shares, perpetual debt instruments. That means in respect of those debt instruments where the redemption date is not specified, such type of debt instruments will be known as perpetual debt instruments or perpetual non-cumulative preference shares. If at all any company lists these types of securities on the stock market, then it has to comply with LODR regulations. Next, if any company lists IDRs, that means Indian depository receipts. If any company lists Indian depository receipts on the stock market, even such type of company should also comply with LODR regulations. What are these IDRs? Let's say there is a USA company, particular company in USA. This company wants to raise money from India. Now, it cannot directly issue shares into India for raising money. Instead, what it will do is, it will deposit its shares with depositories, that is NSDL or CDSL. It will deposit the shares with these NSDL or CDSL. Now, these NSDL or CDSL on behalf of this USA company will issue IDRs in India. Okay, once it issues IDRs, the people who purchases IDRs will give amount to NSDL, and NSDL will transfer this amount to USA, specific USA company which has kept its shares with NSDL. These would be known as IDRs. Now, if any company lists its IDRs on the stock exchange, then it must comply with LODR regulations. Next, securitized debt instruments or security receipts of asset reconstruction company. Basically, both are same only. The concept relating to both is same. What is that? Let's say there is particular bank. It is obvious that for banks there will be receivables. Okay, loan receivables. Okay, there will be some NPS and there will be some loan receivables. Let's say the bank is not able to recover its amount of receivables. Therefore, what it will do is, it will sell these receivables to particular company known as ARC, asset reconstruction company. Now, the amount of these receivables will be paid by this ARC. It will not pay the entire amount. Some 98% or 97% will be paid. Balance amount would be commission to ARC. Okay, it will pay the amount. In return, it will receive the loan asset, or you can say financial asset. It will receive financial asset. Now, if ARC wants to pay the amount, how will ARC will get the amount? ARC instead what it will do is, backing this financial assets, ARC will issue some securities in the market, okay, to public at large. Now the public will purchase these securities issued by ARC and will give amount to ARC. This amount will be transferred by ARC to the bank. Now these securities have been issued by asset reconstruction company. Now these securities will be redeemed by recovering these financial assets. Hope that is clear. Basically these securities are backed by these financial assets. Here the financial assets have been converted into securities, which is known as securitization. Okay, that is the concept of securitized instruments. Okay, securitized debt instruments or security receipts of asset reconstruction company. Okay, if any company lists these two types of securities on stock market, it has to comply with LODR regulations. Next, any mutual fund lists its units of mutual fund on the stock market, it has to comply with LODR regulations, and any other security as may be specified. Hope that is clear. To all these companies, LODR regulations will be applicable. Now moving into the regulations, regulation number 17, which deals with the board of directors. Okay, some of the regulations which will be applicable on board of directors. Now if you see in the Companies Act also, there are various requirements relating to board of directors. Now all the companies have to follow these the requirements specified in the Companies Act. Apart from those requirements, listed companies must follow the requirements specified in LODR regulations also. Okay, the regulations specified in LODR regulations are in addition to the requirements of Companies Act. Hope that is clear. Now we'll see. First requirement, every listed company must have at least one woman director and not less than 50% of board of directors shall be non-executive directors. This is the first requirement relating to board of directors of a listed company. Okay, next, how many independent directors that a listed company must appoint? Basically it will depend based on who is the chairperson of board of directors. See, if the chairperson of board of directors is non-executive director or chairperson of board of director is other than non-executive director, these are the two scenarios. Let us see the first scenario. If chairperson of board of director is non-executive director and such non-executive director is not a promoter of the company, in such case such a company must appoint at least 1/3 of the board of directors as independent directors. Hope that is clear. Let's say if chairperson of board of directors is non-executive director and such non-executive director is also a promoter or a person related to the promoter, in that case such company must appoint at least half of the board of directors as independent director, and the same would be the requirement even if the chairperson of company is other than non-executive director, not chairperson of the company, chairperson of the board of directors. Okay, if chairperson of board of directors is other than non-executive director, then such a company must appoint at least half of the board of directors as independent director. Hope that is clear. That is relating to number of independent directors that a listed company must appoint. Next requirement, board of directors of top 2000 listed entities must have at least 6 directors on their board. Okay, what would be the age limit? The maximum age limit is 75 years. Okay, a director can be appointed to the board of director of a listed entity up to a age of 75 years. Okay, this is not only for executive director, even for both executive and non-executive director the maximum age is 75 as per LODR regulations. If you see as per Companies Act, the age limit was 70 years for executive director only, whereas non-executive director there is no age limit. That is the difference between Companies Act and LODR regulation relating age requirement. However, if you want to appoint any director who has crossed the age of 75 years, then you can appoint by passing general meeting special resolution. Hope that is clear. Next, how many board meetings that the company must conduct? It is same as that of Companies Act. 4 board meetings in a year, and maximum gap between 2 board meetings should not be more than 120 days. Same as Companies Act. What is the quorum? In quorum there is a slight difference. See, 1/3 or 3, whichever is higher, and at least 1 independent director must present for the board meeting. That is the quorum in case of top 2000 listed entities. Okay, top 2000 listed entities based on the market capitalization. Hope that is clear. Those are the regulations relating to board of directors. Now moving to regulation number 17A, which deals with maximum number of directorships that a person can hold. See, this is applicable only for listed entities. Okay, now a person can be appointed as director of maximum 7 listed entities. And let's say if a person is acting as managing director or whole-time director of any other company, in such case such person can act as independent director in max 3 listed entities only. Hope that is clear. That is relating to maximum number of directors, whereas in case of Companies Act, the limit is a person can be appointed as a director in maximum of 20 companies, and of the 20 companies maximum 10 can be public companies and remaining can be private companies and all other companies. That is the difference between Companies Act and LODR regulations. Next, regulation number 26, which deals with the number of memberships. That means memberships to what? Memberships to committees. Now while calculating the memberships of the committee, you have to consider the membership of only audit committee and SRC committee, that is stakeholder relationship committee. Only the membership and chairmanship of these two committees should be considered for calculating the limit specified under regulation number 26. Hope that is clear. Now, what is the maximum number of committees in which a director can act as a member? It is 10 committees, and the maximum chairmanships would be 5 chairmanships. Now, while calculating this maximum memberships and maximum chairmanships, you must also include chairmanships or memberships in public limited companies and exclude chairmanships memberships in private companies, foreign companies, section 8 companies. Hope that is clear. Next, regulation number 24, which deals with some of the corporate governance requirements relating to subsidiary company. Hope that is clear. We'll see that. First requirement, see, there is a listed company. In this listed company, there will be some independent directors. Now the first requirement is at least one independent director of this listed company must be present on the board of directors of material subsidiary company. Hope that is clear. Now the question that arises is, what is a material subsidiary? Material subsidiary means a subsidiary whose income exceeds 20% of consolidated income or whose net worth exceeds 20% of consolidated net worth. Such a type of subsidiary would be known as material subsidiary. Hope that is clear. Now, in which year you have to consider this limit of 20%, you have to calculate it in the previous accounting year. Hope that is clear. That is the first requirement relating to subsidiaries. Second requirement, now there will be audit committee. Audit committee of listed company. Now the audit committee of this listed company must also review the financial statements of the subsidiary of listed company. That is the second requirement. Next, third requirement, now the subsidiary company will conduct a board meeting. For such board meeting, there will be some minutes written. Such minutes of board meeting of subsidiary company must be placed at the board meeting of listed entity. That is the third requirement. Moving to fourth requirement. In two situations, the listed entity must obtain general meeting special resolution. What are those two situations? Let us see. First situation, listed entity wants to sell shares of material subsidiary resulting into its control falling below 50%. Okay, the listed entity wants to sell shares in the subsidiary company. Once the shares are sold, the shareholding of listed company in the subsidiary company will fall below 50%. In such case, the listed entity can sell those shares only after obtaining general meeting special resolution of this listed company. That is the first case in which general meeting special resolution is required. Second case, the listed entity wants to sell disposal is more than 20% of total assets of the material subsidiary. Even in that case also listed entity must obtain general meeting special resolution. Now there is an exception from obtaining this special resolution. What is the exception? In two situations the general meeting special resolution is not required. What are they? First one, if such a scheme is approved by either court or tribunal, or the listed entity is selling the shares or selling the assets as a part of plan approved, the resolution plan approved in IBC. Okay, under insolvency bankruptcy code, a resolution plan was approved, and as a part of such resolution plan, the listed entity is selling the shares of material subsidiary or selling the assets of this material subsidiary. In that case, general meeting special resolution is not required. Okay, this is the fourth requirement relating to subsidiaries. Now fifth requirement, all significant transaction of unlisted subsidiary company must be informed to the listed entity. Okay, all the significant transaction must be informed to the listed entity. Now what are the which types of transactions will be known as significant transaction? Let's see. Single transaction that exceeds 10% of total revenue or expenditure or assets or liabilities of unlisted subsidiary for previous accounting year will be known as significant transaction. Okay, those were the corporate governance requirements relating to material subsidiaries. Next, we'll move into quarterly compliances. Every listed entity which has listed its shares or any of the securities that which we have discussed in the stock exchange must comply with these quarterly compliances. Okay, must provide these documents to the recognized stock exchange on a quarterly basis. We'll see what are the time limits. First of all, quarterly corporate governance report, it has to be submitted to the recognized stock exchange within 15 days from the end of the quarter. Okay, next, statement of investor complaints, that means opening number of complaints, complaints received during the quarter, complaints solved during the quarter, and closing number of complaints. Such a statement must be submitted by the entity, the listed entity, to recognized stock exchange on a quarterly basis within 21 days from the end of the quarter. Okay, next, shareholding pattern within 21 days from end of quarter, quarterly financial statements within 45 days from the end of the quarter, statement of deviation in utilization of funds of public issue. This type of deviation statement must be submitted by the listed entity till the time the proceeds are completely utilized. Hope that is clear. Now, those were quarterly compliances. Now we'll see prior intimation of board meeting to recognized stock exchange. See, the listed entity will conduct a board meeting. Now, in this board meeting, if the listed entity is going to discuss any of these matters, then it has to give prior intimation of conducting of this board meeting to recognized stock exchange. Okay, for various matters there is different time limits prescribed, that we'll see. If the listed entity in its board meeting is going to discuss about proposal for buyback or voluntary delisting or fundraising or declaration of dividend or issuance of convertible securities or declaration of bonus, if the listed entity is going to discuss any of these matters, then the notice regarding conducting of this board meeting must be given. That means the intimation must be given to the recognized stock exchange at least 2 working days before the conducting of board meeting. Hope that is clear. Next, if in the board meeting the company is going to approve financial statements, then 5 working days notice is to be given. Okay, notice of record date and purpose of record date. If the company is going to announce any record date, let's say company wants to grant a dividend. Now for giving a dividend, it must decide a record date. Okay, basically record date means the date if any shareholder holds the shares of the company on this date, then such type of shareholder will receive the dividend. If the company is going to decide this record date in the board meeting, then the notice, the intimation of such board meeting must be given to the recognized stock exchange at least 7 working days before board meeting. Next, alteration in rights of securities, 11 working days notice has to be given. Okay, Next, annual compliances. We have seen the quarterly compliances. Now we'll see the annual compliances. First of all, annual financial statements must be submitted by a listed entity to recognized stock exchange within 60 days from the end of the financial year. Okay, annual report must be submitted to recognized stock exchange not later than its dispatch to the shareholders. Okay, if at all there is any change in the annual report, then such change must be intimated to the recognized stock exchange within 48 hours from the completion of annual general meeting. And annual corporate governance report must be submitted to the recognized stock exchange within 6 months from the end of the financial year. These are the annual compliances. Okay, now there are some committees prescribed under this LODR regulations. We'll see that. 1 second. See, yeah. Summary of all the committees. Basically, there are 4 types of committees: audit committee, nomination remuneration committee, stakeholder relationship committee, risk management committee. In respect of these committees, we will be discussing number of members that has to be present in these committees, and number of independent directors, and who should be the chairperson of such committee, and how many times the meeting has to be conducted, and what is the quorum for such meeting, and some additional point which we will be discussing. See, starting with audit committee. In the audit committee, there must be minimum 3 directors present as members of the audit committee. Now, at least 2/3 of members of audit committee must be independent directors. Okay, and the chairperson of audit committee must be independent director. Fine. Now the audit committee must meet at least 4 times in a year, and gap must be not more than 120 days, same as board meeting. Okay, now what is the quorum? Quorum would be 1/3 or 2 members. However, at least 2 independent directors must mandatorily attend the meeting of audit committee. Okay, and additional points: all the members of this audit committee must be financially literate, and at least 1 member must be having expertise in the financial management. Hope that is clear. This is the requirements of audit committee. Moving to nomination remuneration committee. Now the nomination remuneration committee must consist of at least 3 directors as members, and all the members must be non-executive directors. Okay, of this at least 50% must be independent director, and the chairperson of this nomination remuneration committee will also be an independent director. And the nomination remuneration committee must meet at least once in a year, and the quorum will be 1/3 or 2 members, and at least 1 independent director must present mandatorily. Okay, in case of audit committee, 2 independent directors must present. In case of nomination remuneration committee, 1 independent director is sufficient. After that, chairperson of company may be appointed as member but not as a chairperson of nomination remuneration committee. See, for the company there will be a chairperson. Such a chairperson cannot be appointed as chairperson of nomination remuneration committee, but the chairperson of company can be appointed as member of nomination remuneration committee. Hope that is clear. Next, moving to next committee, stakeholder relationship committee. This committee must consist of at least 3 directors, and of these at least 1 must be independent director, and the chairperson of the stakeholder relationship committee must be a non-executive director, and it must meet at least once in a year. And regarding the quorum, it is not mentioned in the regulation, and this committee will look into complaints of the investor. Okay, moving to next committee, risk management committee. Now this committee will be applicable only for top 500 companies. Okay, only top 500 listed companies based on the market capitalization must frame this risk management committee. Okay, now in this risk management committee, majority of members of board of directors will be present as members of this risk management committee. Okay, of this at least 2/3 must be independent directors and has to be member of board of director. That means the chairperson of this risk management committee must be member of the board of director. It must meet at least once in a year, and regarding the quorum, it is not mentioned. And the speciality of this risk management committee is not only the directors of company but also senior executives of the company can be appointed as members of this risk management committee. Hope that is clear. By this we have completed entire discussion of this committees and also entire concepts relating to SEBI LODR regulations.